In the past 24 hours, Bitcoin and the crypto market has done really well. Nia and Sui just belting it out. And we can see the memes. They're just going for it at the current time. Therefore, is this the time to buy or to be cautious? Let's run the numbers and find out. Just a quick piece of housekeeping before we get into it. Many thanks to all the hundreds of people who registered to get the Profiting from CTKS Method structure course absolutely free. I'd like to thank everybody for their comments, and I'm integrating those questions and comments actually into the course, so the course will be delayed. I'll keep you updated. Now, let's get into it. Being aware of high-value economic data releases is really important, and when we look at the coming week, you can see that there's not many data releases, but actually what is coming out is pretty key. We've got later in the week the FOMC meeting minutes, but something to just keep your eyes on. The CPI is expected to come in hotter than anticipated. This will be a shock to the markets if it occurs. Expect volatility towards the tail end of the week. Please keep this in mind. Last week, the non-farm employment change came in way hotter than anticipated. In fact, it shocked the market. It was largely responsible for the DXY just going literally up a wall. And as soon as people figured it out that there was going to be no hard landing and maybe not even a landing at all, the markets rallied. Now, however, note this, we have a 5.5% probability that the federal funds rate actually doesn't change at all. Now, what happens if the CPI print comes in hotter than anticipated? We may actually see the probability of a rate increase back on the table. Now, if that actually happens, tightening financial conditions could shatter the market's confidence. So this is something that you need to be aware of. We'll be watching this closely. When people first start trading and investing, Rule 448 just is unknown to them. Your chart is moved. That is, the price of your chart is moved by other price charts. This sounds a little weird until you've been inside financial markets for many years. Please let me know in the comments, what do you understand of Rule 448? It's quite a good thing to chat about. Not all charts are created equal. The Tier 1 charts are the engine of financial markets globally, and their structure inside these specific charts, especially the Tier 1s, will determine what's happening with the Tier 2 and Tier 3 charts. These charts will move your chart. In fact, your chart may well be on this list. And please make sure, if you haven't done so already, to just fill in the form in the link of this video description so that you can get that Profiting from CTKS Method course absolutely free. I'm going to spend a lot of time inside this course helping you to understand intercorrelations and interconnections, especially from a trading perspective. You'll find it incredibly valuable. As a trader, it's really important to understand what has the market's attention. Right now, Sui is definitely out in front, as is Nia. And leading up the back of the pack, we have down the bottom on the lower bank, ICP. It's a very good idea to look through the ecosystems, and when we look at Ethereum's ecosystem, we can see IQ has got the smarts. It's out in front. What about gaming? Super is doing just super. Inside the service, Ethereum is crushing it. Inside the memes, Whiff has a whiff of success, and Teo and Hot and Filecoin are feeling pretty good with themselves. AI and Big Data, TR out in front. Whiff again in Solana, and RSR in real-world assets. Looking at the wallets, Safe is out in front, but not by much. DeFi, CFX doing pretty well. Filecoin is not doing too badly, and IOTA was doing pretty well as well. Inside Binance Labs, Sui is looking good. FTT, look at this one, BGB, it literally went down 50%. Whoa! What about the Bitcoin ecosystem? Riff is riffing it up. What about Starknet on layer 2? It's having a ball. And Rune has the DEXs on the run. You'll see news headlines for $1 million in October for Bitcoin. Hey, why the heck not? That would certainly get you interested in reading it. But what is the chart telling us? Well, it's coming down at the current time. Now, does that mean it's going to collapse down? We need to look at structure to be able to answer that question. When we saw Bitcoin come up, what happened to Ethereum? You can see the overlay of Bitcoin, that blue line. Well, Ethereum came up. What about Binance Coin? Did it push up as Bitcoin was pushing up? Yes, sirree, it certainly did. What about Solana? It also pushed up. Look at this. A tail that's not the kind of thing that you want to see on a price chart. Solana is actually under pressure at the current time. What about XRP? It's just following Bitcoin's gravitational pull. Dogecoin is following. ADA is following. The entire crypto market cap is mirroring Bitcoin's gravitational pull. It doesn't matter if you're a trader or an investor, you must know where the structure is on the price chart. There are a lot of different ways that you can look at a price chart. You can look at a daily, a weekly, a monthly, even a 1 minute or 1 second chart, but it doesn't make any difference. If you don't know where the structure is, you're likely to buy at absolutely the wrong time. And the same goes with selling. Getting structure out on any price chart is vitally important. How typically people look at structure, they'll just draw a line from here to here and they'll say, oh, we're coming into structure here, don't worry about it. Or they'll do something else. But in truth, structure is a statistical issue. In order to understand where the structure is, you need to mark up all of price history. And Level 1 and Level 2 standard certification allows you to do that with the most statistically significant lines in existence. What does that mean and why is that important? If you don't know where the support is, as soon as you break down below it, you're likely headed down to the next support structure. If there's not too many levels of structure here, you could pass right through that and rebase, basically wiping out this entire rally. Therefore, it is vitally important that you know where the structure is. And you can see at the current time, we're slightly below a once structural support level. It hasn't confirmed this as resistance yet. We'll need a couple more candles, but it's certainly not looking favorable. We would want something else in this particular circumstance. We would want a confirmation just above this particular high that was printed out before, especially this one. We can see that these highs are actually lower. We're printing lower highs. Now, we don't want to do that. We want to print higher highs. Let's zoom out a little bit and look at price structure as it exists. And going back to around March, this is on a daily basis. What we can see here, we've been in an absolute and utter downtrend for quite some time. Now, what does this mean? It means that sellers are quite strong and they've managed to push price downwards perpetually over this period of time. Now, what we're seeing here is a potential sign of strength at the current time. We also note that these lower lows are getting printed, so we need to be aware of that. This one is just slightly higher, so that's a good positive sign. We have a higher high here as well, so we could be setting up for a bit of a dip and a push forwards. You must always be aware that price can move in numerous directions. Now, why is that the case? Because throughout the entire day, different markets are opening and closing, and there are a lot of reasons for price to move around. If you think from a very simplistic basis, it needs to go up and only up, because hey, that's what you want. What you want and what price does can be very, very different. But if you can take advantage of this volatility, you are sitting pretty if you know how to sell. Unfortunately, many traders are very good at buying and not so good at selling, and that's the same with investors. If you gain the capability to not only buy well but sell well effectively, you can do incredibly well. The markets can literally be a money printing machine, but you must know what you're doing. Now, what does this mean for us? We know that total crypto market cap is how the entire crypto market is moving. We notice here that we've got a series of lower highs. That means a downtrend. Now, has the downtrend been broken? No, not really. We're in the process of testing if we can get over that very short line of resistance. But don't forget, that's not the line of resistance that really counts. Total crypto market cap has had 3,700 days worth of data. We need to know what the structure is around these areas. Inside Level 2 Standard Certification, you'll learn how to draw up SCs or Stanfield Zones. This is an SC. There is extreme, and I mean extreme, structural resistance just above this previous high, and I mean extreme. If we manage to get above that 2.34 trillion, we are off to the races in a big way. If you don't know the CTKS method, you would never know where the resistance levels are or how strong they are, and how strong they are is the deciding factor. Total crypto market cap gives us a concept and idea that we've got a lot of overhead structural resistance to get through. So there's a bit of a panic there in terms of price being able to get through it. Just please be aware that these green candles are used by institutions for one thing and one thing only, to pull you into the market. And what are the red candles for? They're to do exactly the opposite. When everything goes green, it's very easy to get excited. And what's not to get excited about? Price is going up. It's this side of it that we don't like. Why can't price just go up and up and up and never retrace? Pesky markets. Okay, so let's have a look at this. In order to understand Bitcoin, again, we need to know where the structure is residing inside the price chart. So let's pop on that service indicator and let's see what's cooking. I'll also put some labels up here for you so you can see what those prices are. Okay, that's a little bit better. Now, what are we seeing here? We saw on Total Crypto Market Cap that Total was losing an area of structural support. We're seeing something quite similar inside Bitcoin at the moment. We have a level of structural support at 63,113. This analysis, these figures, come out of 5,200 days plus worth of analysis. The bears will expect to follow through below 63,113 towards that 62,459 level. If the bears get their way, there's a lot of underpinning structure here that should reflect Bitcoin back. So just be aware, if you're going short, there's a zone of problems that you may encounter. The bulls will expect us to get above that 63,800 mark to clear out these, at least these two highs. And we're getting into a positive CTKS gap. Now, positive CTKS gaps are responsible for positive and negative fair value gaps. Fair value gaps come after a CTKS gap, and you basically need 3 of them anyway for a fair value gap to be understood. With the structure inherent inside the price chart through the CTKS method, you don't need anything like that. You already know that there's no resistance between 63,322 and 64,387. If the bulls get back in control, we could just forge up very, very quickly. I would suggest that there are 2 areas that you really need to keep your eye on. One is around this 64,400, the other is 62,700. Let's zoom out to a daily basis. Now, you remember that Total Crypto Market Cap had an enormous amount of overhead structural resistance. Well, Bitcoin doesn't. It doesn't have it at all. It has actually the opposite. There's quite a lot of structural support between that 62,794 and 60,576. Now, what does this mean? What are the implications of this? Well, what we could see is Bitcoin putting in an outsized effort in relationship to what the alts do. People will call it a flight to safety and all sorts of other things. We just know it's structural. It's that simple. And we know it in advance. And we nearly had a closeout at the estimated end of month price for Bitcoin, but just missed it. Price paths like this are available on all the charts inside the service. That's literally 33 charts and 33 price projections. They're all done at the start of the month and they are not changed. And they require Level 2 standard certification to draw. That's the cool thing. Everything that you see here you can learn for yourself. The alts can give you a very good understanding if Bitcoin and total crypto market cap are going to hold or if they're going to get weaker. And we can see that Ethereum is showing material signs of weakness. But the real key for us is where are the structural levels? If we don't know where they are, it's really difficult to understand what is going on. So let's just zoom in here a little bit and just discuss what we found in this particular price chart. Above 2,500, and remember, round numbers are retail. If you're using round numbers, please stop doing so. You want to go off the zero. Going on the zero, you're going to join a big crowd of people who basically, sorry to say, they don't know what they're doing because these levels are so incredibly crowded. You want to be just below, or in terms of if you wanted to sell at 2,500, just drop it down to 24.99 and just pick a decimal point. Now, what we see up here is that we've got very severe resistance levels. There are a lot of sellers inhabiting this 2520 and beyond mark. That means that it's really difficult for ETH to get through all of this. In fact, it didn't even challenge it. So when it lost the 2500 mark, that puts in a lower structural level into play. It gets magnetized down. You can just think about it this way. How on earth would you know that all of the sellers are up here if you didn't have the method? And remember, this is 2 levels of standard certification and drawing across all of price history. It is just magical to know where the sellers and where the buyers are going to be. We've looked at total crypto market cap as well as Bitcoin. They're very, very important to look at from a structural perspective. And you can also see Solana is inhabiting the same kind of pattern, the same kind of structure. But there is some weakness here, but not as much as Ethereum. Now, why isn't it so much? Structure will actually help you to understand that. Let's just pop on the structural indicator. So what are we seeing here? We've got a level of structural support just around the 149, 148, around that 147.20 mark, and much, much more at the 146.60. Remember how Solana just pierced all of that? I call these intention spikes because it intends to go that way, and that's what unfortunately we've seen. Notice how support has acted as resistance. If it can't get above, it's going to the next one. If it doesn't even challenge it, it's going to the one below. You will see continued weakness if a particular chart cannot challenge its upward structural levels. And at least you've got a pretty good idea as to where things could go from there. So let's just zoom out a bit and have a look at the lower structural levels just down here. Okay, so when we look at this, we're looking around that 141.15. If we get continued negative bearish pressure, and as soon as we lose this particular level, we could move down very, very quickly. So please be aware of that. If we're moving down to the 141.15, that's just a fantastic buying opportunity if you have a bullish case scenario. Don't be scared out of the market by negative price action. You just want to time it correctly, and you can do incredibly well. I'll be sharing some of my trades inside the course, and it'll give you a very good idea as to what you can do. Let's now flip it around, not from the bearish stance, because a bearish stance would require this specific structural level to get hit, underside retest, and go down. But if these support levels do what they're supposed to do and act as support, and we manage to get above 149, look at this positive CTKS gap. It's literally up to the 160 mark. Things could move very, very quickly, but you'll have to be pretty fast and adroit with this particular scenario. Just understand that we are currently under negative price momentum. Until we break above the 149, we're not out of the woods, not even close. Rule 225 is very powerful. Bitcoin cannot escape the stock market's gravity. Now, why is this important? Why do we even care? Crypto is a tiny market. People inside the crypto market are not mainly, are not aware of the other markets. Why do I say that, Ken? That's so rude. Some people are. Of course, some are. But the vast majority of people are just chasing memes and JPEGs and all sorts of stuff, and they just say, I could turn $1 into $1 million, and that's why I'm here. Let's have a look at one of the culprits that's actually smacking Bitcoin in the head at the current time. It's the VIX. The VIX, or the fear gauge of the main market, is causing the main indices to come down. Now, who cares? We're in crypto, right? Wrong. We're in a financial market, and financial markets just have people and money. And so if the main markets are just crashing down, don't think that people will just naturally flow off to a different market. Of course, it happens sometimes with gold, but gold is yield dependent, dollar dependent, and geopolitical sensitivity dependent as well. There's a lot of moving parts, and if we get a major sell-off, gold will crash just like everything else, but it tends to recover faster and more quickly. So, just keep that in mind. What we're seeing now is the VIX starting to put in some positive momentum. This is not good. This is not what we want. A lot of people are talking about Uptober. I guess the concept of those people, hey, I'll give you good news so you tune in. Well, I'm just going to give you the truth, because the truth inside financial markets is vitally important to know. If you are not prepared for the downside and only think things can go up, well, you're going to get whipsawed a lot. Look at this, up and down, up and down. This is what always happens inside financial markets. So it's very important to be aware. We're noticing a strong directional correlation between the yields and Bitcoin, which means as the yields come up, that's not necessarily bad at all for Bitcoin. In fact, in the last bull run, that's the way it was. This could be an early sign that things are starting to turn around for the crypto market. From a long-term perspective, the crypto market has been in that downward channel, but we're starting to see signs of life. Unfortunately, there's a lot of geopolitical mess all around the world. And unfortunately as well, that geopolitical mess weighs on all of the markets, including crypto. And you can see here, Bitcoin's gravitational pull. Bitcoin is always the blue line. You can see the major indices, in this case the Nasdaq, just pushing down, and it's influencing Bitcoin to do the same. If we see a consistent and persistent retracement inside the major indices, this will pull Bitcoin down with it. So we need to know where the structure is underneath Bitcoin so we can step in at the right times. I'm going to teach you a lot about timing in the Profiting from CTKS Method structure course, and hopefully you've landed that one free, absolutely $0. The major indices are really important to understand. When you understand the major indices and how they impact Bitcoin and, of course, all of crypto, it's vitally important to understand that. And one thing that we've seen just in the S&P 500, it's shown a degree of resilience. Now, why was that? When the non-farm payrolls came out, the NFP report, it was just a bumper, incredible boost in employment numbers. And that boost basically said, hey, the economy is really healthy. No problem here. Up until that point, people were talking about depression, recession, you name it, the world was over. If you're inside the service, you would have got the updated indicator for the SPX, the S&P 500. Here we've updated 55,800 plus days worth of level 1 and level 2 standard certification. And I just want to draw your attention to this little area. This area from 5712 to 5724 is extremely strong structural support. If we manage to keep above this area, at least close tomorrow, and this is a daily chart, if we can do that, we're in business. Whatever the VIX is doing, it's doing for a reason, and we'll find out what that reason is later on, maybe tomorrow. The very good news is that if you have the indicator, you'll also know that there's some pretty strong structure existing below that level as well. And if you have the indicator, you will also know that there's very little in the way of structural resistance overhead. Now, let's put all of these things together. If the VIX starts to come down, and that's what we want it to do, if the VIX comes down and this structural support plays in and we get a positive movement up, it could melt faces. And if that is the case, guess what's happening to crypto? But Ken, I don't want that. I just want one direction. It's a good group, but you won't find it inside financial markets. Let's zoom in to the S&P 500 and let's pop on the indicator so that we can see what structure is actually playing around here. We can see that 57.21 and the 57.17, they're pretty good. They're good levels of structure. We're above them currently, but with the VIX spiking, we would expect to retrace and to at least test those levels. If we remain above these levels, that is going to be fantastic. So look for daily close above 57.21. You can see that we're not far away from the previous all-time high. A lot of people say, price discovery, price discovery. Please keep in mind, there's no real such thing. Price discovery always has areas of resistance above it. Having a quick look at gold, it can look pretty random what price is doing in the precious metal, but it's not that random at all, especially when you have an understanding of structure. And what do we see here? We can see that support is at 26.47. This is quite an important level, and there are a few levels below it. They may be lighter, you might not be able to see them, but if you have the indicator, you'll see them very clearly. Also, a 26.61 structural resistance level. For gold to go higher, it must bypass 26.61 for a bullish case scenario. For a bearish case scenario, we must move below 26.47. Please let me know, what is your favorite part of the CTKS creed? Or do you think something should be in there that's missing? I'm really interested in reading your comments. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.